What's up, everybody? Good morning, good afternoon, good night. Welcome back to another morning edition. I know yesterday we did a 3 p.m. afternoon edition, but welcome back to the BitLab Academy daily stream. My name is Kellam. Welcome to the show. We got a wonderful guest on today, and we've got some big, I don't want to call it news, but there's a big economic event that we've been waiting on. We've actually seen this playing out in the charts with that contraction or the consolidation into zones on multiple coins. We're also seeing some small pullbacks. Is it a breakdown? Is it a bear trap? We talked about that yesterday, but what can we expect today with the, with this big event happening with the FOMC meeting? Started yesterday, and of course today they're going through probably about noon or 1 o'clock, and then they put out the decision at 2 o'clock. And then remember, there's always going to be volatility leading up to that. And then between that and the actual press conference that happens at 2:30 Eastern time. So we're going to be talking about that today. We've got a guest on. We're doing a new format with guests in terms of the backend system. So if we do have any issues, if there's any issue where you can't see or you can't hear, just let me know in chat and we will switch to Zoom nearly immediately. So without any further ado, I appreciate you coming on. Everybody, if you don't know who this gentleman is, do you want them to call you by your name? You want to call you by a nickname? You want them to call you daddy? You want them to call you Cultivate Crypto?
Yeah, well, like with my audience, we go by a bunch of different things. Basically, Charlie's my name, so you go by that while we stream here, because it's kind of awkward to call me by my brand name. But Cultivate Crypto or CC, a lot of my audience calls me that. We have the Moon Gang, which is our group of people, and then we do the Crypto Mindset course once a quarter, which is our flagship product. So yeah, just call me Charlie, and we're good.
Right on, man. Well, so on that note, Charlie, what do you make? We kind of alluded to this before, but we were on mute. We were giving everybody the nuggets of wisdom. We were just about to dive into it. I'm glad we got the audio on now. We had probably a couple of the biggest weeks in history with BlackRock getting involved, getting into the foray, the ETFs, probably more likely than ever. Who's to say if they will or will not get approved? But we've got them on the clock now. They got some deadlines coming up. We have parameters around when those decisions have to be met or delayed. But the fact that BlackRock not only, submitted these applications, but also went on that press junket and talked, so positively about Bitcoin, signaled an absolutely gravitational shift in the world markets, with them being involved in crypto now. And then we see XRP case not necessarily get settled, but come to summary judgment and benefit to the win of XRP not being a security. And we saw the pumps. But as I talked about yesterday, there's a lot of consolidation and no follow through. Does this mean that the wind in the sails of the bulls is starting to evaporate? Are you expecting a little bit of a pullback here? How should people contextualize where we're at right now in the market with all the news and the lack of follow through of it?
Yeah, I think sometimes people get overhyped on, one or two bits of news being like the be all end all. And so a lot of the times when we come out with news in crypto, right, it can be it's really the build up to that news where you make the most money if you're looking to do a swing trade or something. Personally, right now, I'm looking at 2023 as the year of accumulation. If I can sell a few, major tops, cool. But I expect more bearish, not bearish, but crabbish price action, generally speaking. So a lot of consolidation, right? And so in accumulation phases, it's not fun. It's boring. 2019 was exciting for the first half of the year. I don't know how familiar your audience is with Fibonacci levels, but if you're measuring on a retracement from a top to a bottom, a retracement back up to the 0.618 happened in 2019, where we got Bitcoin going from 3,100 to 14,000. And during that time, that was freaking amazing. And the second half of the year was a big nothing burger. Whereas this year, we only came up not even to the 0.382, right? So I feel like even though Bitcoin's done a double this year, we've actually had muted bullishness compared to the last cycle in some respects. So I do expect more, bullishness at some point this year, but I also expect a few kind of headwinds as well. I'll mention a couple of those when we get to them today. But if I were to look in the short term, right, I think if we're going to get another pump here in the next 1 week, let's say today we get either a 25 basis point hike or continued pause, I think that will give us a shot to head back up to like 31, 32, maybe up to $33,000 Bitcoin at best. And then we'll get dropped back down again into mid-August. So the next 1 month will probably be, or at least the next 3 weeks will probably be a lot of crabbish action with a bit of up and a bit of down. I think to the downside, we probably don't go much lower than 27, 28K. If we do, that's where then the bears can take control a little bit. So I go by kind of 2 or 3 different tools in terms of what I use to look at the market. So I'll look at just normal price action in terms of like support resistance and all the stuff that everybody else looks at there. Then I'll look at cycles in terms of daily, weekly, and yearly. And then I also look at Elliott wave patterns. So those are my 3 that I generally look at to make these things in the market. So cycles wise, if we're looking at a daily cycle, we're basically in that weak part of the cycle where we probably have about I'd have to look at the chart 100% to realize, but it's something like about 20 days. So about 2 to 3 weeks where we probably don't have too much bullishness. And then if we want to get past 33,000, that 0.382 level on the fib retracement, if you're going from the top of 69,000 down to the bottom of 15,500, and I do think that is the absolute bear market bottom for Bitcoin this 4-year cycle. So if we were to get up to that 0.382 level, that would be about $36,000. So I think Bitcoin has like a magnet at 36,000 trying to like suck it up to that price. So it's just a matter of time. And so the way that I'm really looking at 2023 is, okay, it's the year of accumulation. So what are the best areas to accumulate at? The last thing I'll say on this, not to get too long-winded, because I could go on for like an hour on this shit.
Yeah.
But like, if you look at kind of like a good, better, best area to buy, obviously the best area to buy is under $20,000, right? Between 15,500 low and $20,000, that's going to be your best generational buy opportunity. I think the likelihood of us getting back to that area at all is about a 5, maybe 10% chance max. And if it's going to happen, it has to happen before February of next year. So that's probably very unlikely. And then your better, that's your best scenario. So your better scenario will probably be under $25,000 Bitcoin, so 20 to 25,000. I would say realistically 21 to 25,000, because the realized price, if you're looking at on-chain metrics, is at about $21,000 right now, and I think that's pretty much Bitcoin's floor. And then your good scenario is basically 25 to 30,000. So we're in that range right now. And then the one thing I've been saying on my channel the last 365 days is, if we're close to $1 trillion market cap for all of crypto, right? Plus or minus $200 billion. So 800 billion to 1.2 trillion market cap for all of total crypto market cap. As long as we're in that range, you could literally just throw, and this is what I'm doing, but hey, hashtag not life or financial advice. I feel like you can pretty much throw as much money as you want into the market between that range of total crypto market cap. The only thing you have to do is put it in quality projects, right? So Bitcoin, Ethereum, and then any other coin that you can hold for 2+ years, right? Those are the only assets you should be doing that with, in my opinion. So that's how I'm looking at the market right now, and that's the action that I'm taking. So don't let the fear consume you is pretty much one of my taglines for this year.
Yeah, it sounds like we're very in line with each other. We talk about fibs all the time on the channel. I think it's with some people's strategy a little bit overutilized if they're not balancing it with other signals. But I think for the vast majority of the market, the lack of awareness of a simple tool, is kind of profound. But my sort of direction on that with people is, when they use fibs, there's no, except unless you have a defined top and a defined bottom of, whether it's a macro cycle, those are quite easy to draw. But if you're trying to, draw a Fibonacci on a move in the market and get an extension down or something, where do you draw it from? I always tell people, it does take a little bit of experience and experimentation, but I say, try to draw it from a point that when you draw it from that point, the levels that are expressed where there's previous price action, when you look left, if they line up with noticeable sort of price memory of trouble areas, whether it's support or resistance, then you probably got yourself a good fib. But with that being said, talking about today is the day, and people want to believe, even part of me, that the FOMC decision is going to pick the direction, whether it be up or down, for the next period of time. And I'm just curious your thoughts on that, because it's clear from the CME FedWatch tool that it's like, I don't know what it is today, but yesterday was 99.8%. So it's like, and they've been pretty damn spot on. So I've been trying to let people know that the decision's one thing, the tone of the press conference is a whole nother, probably more profound tradable event than actually the number that comes out at 2 o'clock. So what's your thoughts? Are you also in line with another rate hike today? And then what's your sort of over and under on the tone? Is he going to remain, is he more hawkish than the market really is giving him credit for? How do you think this is going to land? And do you think the price, like you saw the poll there, what's your sort of answer on that poll?
We go back to March 10th, around March 10th of this year, he was trying to put the fear of God into the market. He was saying, well, we're going to get a possibility of a 50 basis point hike, right? And everybody's like, oh my God. And if you look at Bitcoin's price into the cycle low that it had around March 13th, it just fucking tanked like a rock, right down, a couple $1,000s at the time. I forget, I'd have to look at the chart to see exactly what prices, but and then I think it was a few days later we actually had the actual Fed meeting. By that point the price is already recovering, right? So I do think they try to put the fear of God and a little bit more of that into the market in terms of sentiment by the way they talked before the meeting, a little bit more than, they have a little bit more bite than that, or a little bit more bark than actual bite, at least in terms of 2023 and 2022, right? They had all the bite because that fucking sucked. But let me know if I should not say that on your channel, by the way.
Well, we generally keep it pretty family friendly, but we're all adults here. We're all adult here. And when we're talking about Jerome Powell, the Fed monetary policy in these markets, sometimes an F-bomb is the only thing that can express the confusion of everything going on. So
exactly. So I think it's most likely they're going to do a 25 basis point hike. They've already pushed, well, depends on how you look at it, whether they did this or not, right? But they pushed down inflation towards 3%, right? And so what would be the point of doing anything more than a regular 25 basis point hike? I don't see the reason for anything like that. And then the only thing I could see is like a 10 or 20% chance of remaining paused, right? And if that happens, I think price reacts to the upside pretty quick, and then we'd probably go up to about $33,000 within like the next 1 week. But the likelihood of that, I think, is less. So if you just look at how Bitcoin performed throughout the entirety of this year, right? We had 25 basis point hikes pretty much the majority of the year, and price did what? It went up, right? So the only time that you really have to be careful of the rate hikes in terms of where Bitcoin's at right now in its 4-year cycle, because like I said, it is lower. It hasn't pumped as much as it did in 2019. The only thing you really have to worry about is the end of 60-day cycles. And so shout out to Bob Lucas. Bob Lucas is a great resource for cycle theory when it comes to Bitcoin. I think he's one of the very few people who does that on a daily and weekly level. Almost everybody only does it on a 4-year level. And I think time is much more important than I think people realize. And so right now we have that second half of a 60-day cycle in play, which means that next 20, 21 days is where the weakness is at. So if we do get a 25 basis point hike, I think anything to the downside, that as long as we're staying above $27,000, I think that's just a temporary pullback and it's a good pullback to buy. So again, I'm not saying you should be totally cavalier about it, but you have to be looking at the long term. If you're looking only at the next 1 year, you're probably putting more capital in the market than probably you should be. So, I don't want to ever tell people to tone it down when buying crypto. I actually think right now it might be a better time to buy as much Bitcoin in the next 3 to 6 months as possible, because I do feel it's pretty likely we're going to actually get the implementation of a central bank digital currency in the United States within the next 3 months or less.
Sorry about my mic being muted. This is where Cultivate Crypto is right here. This is what I was saying. BitLab Academy, follow, hit the retweet, hit the like button. Make sure you're following me right here at Kelly Kellam. Now, coming back over to you, good sir, I just wanted to say, in regards to altcoins, especially considering what's going on with what has gone on or transpired with XRP, is there going to be an adjustment or augmentation or change in the nature of how the cycles the liquidity has flowed within the space for Bitcoin? Sometimes Bitcoin and ETH kind of competing for who's leading, and then the altcoins tend to follow, and then whatever narrative project or niche after that. Is that going to change? Is there going to be a bit of a difference? Do you foresee that now that XRP is not considered security, and that sort of shines its light onto some hope across the broader market? I think, is that going to change when altcoin season happens? Is it still going to be a little bit suppressed for a while until we break not only 32, but really start getting that sort of pre-having real pump, if we get it?
Yeah, I think any altcoin seasons that happen between now and the Bitcoin halving are profit-taking opportunities. I kind of hate to say that, but if you look at the beginning of this year, right, the altcoin season that we had, let's say from January to April, depending on which coins you're looking at, the majority of them only pumped into the end of January, beginning of February, and the rest of them, basically dissipated out after that. Some of them even came back very close to their lows of the beginning of the year, which shows me that those coins in particular don't really want to do anything bullish until next year, right? Until leading up to the halving or just after. We had Cardano do that in the last 4-year cycle, right? It actually had its bear market low, I think, after the Bitcoin halving or just around the Bitcoin halving. Part of that was due to the Corona crash in terms of, that black swan event. So, you could argue that it wouldn't have happened otherwise, but I would just say, yeah, that's, being concentrated within this year into the mains, and then maybe one or two coins that you think can outpace Ethereum, over the entire bull market. Those tend to be newer coins. That's pretty much my stance on that at the moment. In terms of what's different this 4-year cycle, Ethereum is different, right? I don't think the Ripple case adds a tailwind in terms of, okay, now we have less holding us back. We can, everybody in the market can, or new people in the market can come over to crypto a little bit easier and, with less worries. But the real fundamental change of the 4-year cycle is Ethereum going to proof of stake, right? And if you look at Ethereum's bear market low, it happened in June of 2022, right? And Bitcoin's absolute bear market low happened in December. Well, actually, sorry, November 21st. So that's never happened before. We've always had Bitcoin make the low in the market or very close to it 1 or 2 months, around there. But Ethereum has never beat it for the low. And the reason for that is because Ethereum's become deflationary. So what that changes in the 4-year cycle, you can only speculate, right? And where I think that's going to have the largest effect is actually towards the top of the current 4-year cycle. So I do think there's a chance for Ethereum to flip Bitcoin in terms of market cap, but maybe for about like 1 to 3 months max, early 2025, mid 2025, something like that. And people say, oh, the tides have changed. Take profit probably around that time. And
so on that note, being that we have all these Bitcoin ETFs, spot ETF applications in Bitcoin, and I hope everybody starts to make this distinction. I think one of the biggest poor PR campaign it's part of it's because it is the entire crypto ecosystem is broadly decentralized. There's not a central marketing authority, but the fact that the whole industry is called the cryptocurrency industry rather than crypto asset industry absolutely really just has created a lot of cognitive dissonance there around it all. So Bitcoin, I think Bitcoin,
for the new people.
Yeah, I think Bitcoin is very different from Ethereum, different asset class entirely. And I think Ethereum and Bitcoin together are also entirely different asset classes in the broader altcoin market as well. So do you think that once the Bitcoin spot ETFs start getting approved, and whether it's en masse or the dominoes happen very quickly, either way, do you think that spot Ethereum ETF are basically, is that going to be something that comes in? Or is that going to be harder? Or is that going to be more broadly only included in something like a potential spot digital asset ETF that has an index? Is that something that's on the table too in the foreseeable future?
In Europe, definitely. In America, I don't know. But I think in America, the main question will be, does Goldman Sachs have their bag yet? Because a lot of banks are already looking at Ethereum. I think I forget exactly when it was, but it was maybe like 9 months ago. I did a stream breaking down a Goldman Sachs report on Ethereum. I'm pretty sure, based on the what I've read through Goldman Sachs' actual reports, it seems that they're actually more bullish on Ethereum than they are on Bitcoin, mainly because they have an opportunity to control it more. I think a lot of the traditional banks have gotten frustrated with Bitcoin because they see the money there. They want to, work with this asset class, but since it is decentralized, or the most decentralized asset in some respects, they get frustrated with the lack of control that they can influence on it. They try to influence it, right? And they can do it for a certain period of time, but not for a very long time. And so they get frustrated with that. And I think because there is a human, in Vitalik Buterin behind Ethereum, they might, be trying to go towards that more. So the question is, if they've loaded up their bags, then I think they're cool with the spot ETF for Ethereum. If they haven't, then they're going to wait till the next cycle, and then they're going to poo-poo Ethereum at the top of the market because they're trying to buy more.
Yeah, no, I totally get that. Well, you know what, everybody that's tuned in right now, I just want to say to each and every one of you, remember, even if you feel like you're behind, you are ahead of probably 99% of the world, not only just being involved, but actually actively participating and, engaging in content that, at least I try to bring you information that helps you improve your tool bag, your tool set, your strategies. Because, it's one thing to know about something. It's another thing to know how to engage with it effectively. And every single one of you, it's very selfish that I'm sharing all this content because, yes, I'm helping you. But more broadly, what I'm really doing is trying to make sure everybody can participate this in a meaningful way, because the better you do at this, the better walking advertisement and missionary you are for this space. Because if you're doing better, people ask how you got there, and you say, well, I'm in this digital asset ecosystem, and I've learned here, and here, and it's changed my life. If you jump in and you fail, then you become a poison seed to all those around you. So it's not only bad for your portfolio, but it's also bad for everybody that you come in contact with when you talk about this. And Charlie here does the same thing. But Charlie, I do want to say, everybody, if you haven't yet, hit that like button, hit that subscribe button. We still have about 60% of the people that watch on a daily basis, meaning you're here regularly. Something about this is engaging and you haven't subscribed. So what are you doing? Hit that subscribe button. If you need to buy a new mouse, because apparently your mouse is broken if you can't figure out how to subscribe. I want to help you there. But Charlie, let's jump into some charts. Let's start with the dominance and the Dixie, and then kind of dive in and see what you're looking at, especially going into an event like this, a major event with the FOMC meeting. How are you looking at this in terms of a trade, no trade scenario? And then following on from that, what are you generally paying attention to right now in the market? Could be Bitcoin, could be altcoins, could be AVAX, could be, the USDT dominance. What's in your mind? What's your strategy sort of broadly now, FOMC and coming into the next month?
Okay. So my strategy right now is essentially to just buy as much of each dip as possible, and then with coins that I can hold for the next 2 years, well, 2 to 3 years, let's say, right? And so those coins in particular for me right now, the majority is Bitcoin, Ethereum, and Pulse Chain. Now, I know Pulse Chain's not necessarily everybody's cup of tea, and we can get into that a little bit, but that's the strategy. In terms of the DXY, I feel like based on the chart, right? I could show the chart if you want.
Hell yeah,
based
we
on
want
the
to see the chart, baby.
Okay.
Show us those
let's
charts.
pull it up. All right.
The spring break.
I think the chart.
Show us your charts.
Yeah, exactly. Right. It's like I'm on the West Coast, so it's like 8 a.m. in the morning, so I'll have to tone it down. Hold on a second. DXY. Let me pull it up here on the back end, and then I'll throw it up here. There we go. Let's zoom this. I'll try to full screen it here. All right, we are live. Can you oh, there's a little bit of a delay here. Can you see that?
Yes, sir.
All right. So if I pull it out here on the DXY and just kind of come out here a little bit, you can see that it's lost a lot of support, right? In terms of like what you would consider this bull move when it went from like 90 to 115, 14 area, right? That was pretty parabolic and it broke that pretty quickly and then just came down, right? And it did that also if you're even looking at, the more shallow trend line there. And then ever since, I guess we could probably put a new one on here right around there and just say, okay, well, for right now, we're in a bear trend until we break that. And so right now we're hitting that. I guess the 111 day maybe on this one wouldn't be as useful if we just turn on our Bollinger Bands. Yeah, it's just kind of in a crabbish area where if you kind of look at the long-term support, since let's say 2015, it looks like that kind of, we could probably put on some VPVR on this. Let's see if that pulls up on this. It's not available for this one. But yeah, without the VPVR, you could just see like probably the majority of support will be below this area of about 99, which is where we got the first reaction here. And then we kind of probably settle down. So I think as long as it doesn't go back above probably in the short term here, back above 103, 104, above that area, then it's probably going to stay down to crabby. So sideways to down from here, but not too much down. So the fact that this is, this pretty much tells me right now the DXY is less of a factor, because if there's weakness here, then Bitcoin's kind of free and clear to do what it wants, if that makes sense.
Yeah.
So that's how I'm looking at the DXY in particular. Now that I got the charts up, bro, we could just go like full chart, like whatever we want to do here. But
yeah, let's
was
do
there
it.
any other charts? All
yeah,
right.
I mean, what do you see? Well, let's start with Bitcoin dominance. Where do you see, there's still an argument to be made, like, for instance, in the Benjamin Cowan camp of, still a large run to the upside on dominance. But on the flip side of that, I'm less inclined to believe that. I think 53 to 56 is probably about where it's going to go. And I think the market is the sentiment's so fire right now for altcoins because of XRP that any positive news, especially related to SEC, especially if we get some cascading positive news out of the SEC cases, that I think the altcoins will run harder than we've seen before. But we also have to be aware that the market caps, as more monetary energy enters each one of these assets, it does take a lot more money to get those gains. So will we get the multi-1,000% gain? I don't know. But I think broadly across, cumulatively through those, when we look at the total three, I do think we're going to get a pretty explosive move when it does come. But what are you seeing?
No, I agree with that 100%. And in terms of the area that we're at right now in Bitcoin dominance, it looks like the best chance that Bitcoin dominance has of increasing at this point is doing something like this that it did here for about a month in December of 2020 to about January of 21. It had its last hurrah, peaked above the trend line here. Looked like this freaked a lot of people out in terms of altcoins, right? When Bitcoin is making new all-time highs, because it popped above the trend line that had been established, I think, on 4 highs, right? And people are like, holy shit, is Bitcoin going to take over? And the altcoins aren't really even going to have a run, and Bitcoin just is the only thing that screams to new all-time highs. That was partially the narrative at the time. And that pretty much was the fake out, right? And then Bitcoin dominance here just went down like crazy. And we had one of the biggest altcoin runs of the last bull market. Now, I don't think we're in that phase right now to do something that extreme to the downside for Bitcoin dominance, but I do think we could have that upside where, yeah, if you came up to that 56 area, that's literally right at the top of this area of what is right now resistance for this chart. And so, yeah, I would say we won't get, I would agree with that and say we won't get back above that area. That being said, I don't even think we're going to get back to like the previous highs that we had here at 52. It's possible, but you can see with this upper trend line here that it is actually, even though it didn't touch it, it is respecting that area as resistance. And if we were to zoom in, you got the 200-week moving average lining up right with that line right there. And so right now in the short term, as long as we probably between now and October, if Bitcoin stays below 51% as it is on the TradingView chart, because I know CoinGecko and CoinMarketCap and these different sites have slightly different numbers. So you have to kind of just go with the pattern on the chart on this one, because each one's going to give you something slightly different. But yeah, if we stay below this area of 51, 52 until that period of time, I wouldn't be surprised. And then any like real altcoin season in terms of like a sustained one, what that means to me is longer than 3 months of altcoins having a run. If we go below this 49%, which is currently the support area, if we get back within this region that we were at pretty much most of the bull and bear market for the last cycle, then once we get below there, that's where you can probably see more altcoins starting to take off. So between then and now, I know everybody wants to get some action and run towards altcoins because, Bitcoin, Ethereum, they're great, but they sometimes don't give you, the crazy X's in the short term. And I think if you do that with assets this year that you're not confident in holding longer than a year, that's probably, it's generally a mistake unless you're really, really used to short-term swing trading, which depends on the type of person, and how much experience you have.
Yeah, I completely agree with that. So what else are you seeing? Okay, we're coming into the FOMC meeting. We talked about dominance. We talked about the dollar index. That's a little more broad, but in the near term, between now and the end of the day, what is the Bitcoin and Ethereum charts telling you? Where are you seeing things? Is it a fake out up and then down? Is it a fake up down then up? Is it a double and then crab? What are you seeing the pressures in the market to be?
Yeah, so I'll go to my dirty Bitcoin chart, which has way too many lines on it because I use it on a daily basis. But if I were to go the short term with Bitcoin, let me just zoom in on this real quick. So in terms of the short term, right? I'll kind of reiterate some of what I was saying before, because a lot of times when we talk about charts verbally, right, it just is what it is. So right now, in terms of a 60-day cycle, and shout out to Bob Lucas for this, because Bob Lucas, definitely go subscribe to his channel as well. He put out, the idea of the 60-day cycle in Bitcoin. And I, for the life of me, do not understand why people don't use this more often, because cycles do help a lot. I think it's at least a quarter, if not 30% of when I look at price action. I look at cycles, and a lot of the times I rely on them.
Time analysis is one of the most overlooked things in markets, because you can project momentum wave swings. You can project, you can even look at the Bitcoin halving and see very clearly there's about a 500 to 550 day, basically parabolic run that happens post halving. That from the halving to the point of the next all-time high on all cycles has been about 500 days. So you look at the time before that, there's clear cycle, and the 60-day cycle. Let's break that down and see where are we at in that 60-day cycle.
Yep. So in terms of the 60-day cycle, you can look at it, and this is with all cycles in terms of depending on the time frame you have on them, but you can look at it as the mid-cycle point is on average 30 days. So if you have a high before day 30, that's considered bearish, right? If you have a high after day 30, that's considered bullish. So if we look at the 60-day cycles we've had thus far this year, right? The very first one was, I would say, neutral to bullish, meaning that we had it past a day 35 high, but it wasn't by much. And so then it became kind of, neutral to crabbish, right? And then you got a cycle low, and then you had a nice bullish move after that, right? And then in terms of the next cycle, right, we had a 47-day high, which is a little bit more, which is nice, and that was bullish. Came back down, hit support. Another interesting thing here is the 111-day moving average is a very important moving average, I think, throughout the bull cycle. And we used that as support, hit another cycle low, got another neutral to bullish one of 35 days. And then we finally got our first bearish one of the uptrend that we've had this year, right? If you
So
look at the
I
60
want to
day,
pause you for a
yep.
second because I shared this with a friend, and I thought it was an interesting thing. A lot of people don't really notice is you're familiar with the short-term holder cost basis, correct? So short-term holder cost basis is a great determiner of bearable trend. You know, once we break above it, we tend to hold support and have a strong, you know, basically the initiation of a bull market. When we break below it, we tend to break down, come and retest it, and really confirm the bear market. So it's similar without even having to pull up on-chain data to look at the short-term holder cost basis. And I guarantee you, the 111 day falls within this category. If you look at the 120. I think it's around 120 day simple moving average. It lines up almost perfectly with where the short-term holder cost basis is, and the 111, of course, would give you a little bit better foreshadowing because it's going to move quicker, right? So I don't use a 111, but I'll definitely start looking at it. But those sort of medium long-term timeframes can be excellent signals on the market.
Yeah, 100%. And personally, the thing that kind of inspired me to use the 111 day in particular was the pi cycle top indicator
Yeah.
for Bitcoin. And the interesting thing that I just played with it during the bear market. I was like, what if, right, we try to use a top indicator for lows, right? Just kind of counterintuitive. Let's play around. And if you do look at the amount or percentage that Bitcoin was below its 111-day moving average during the bear market, anytime it was between 25%, like of a drop under the 111-day or more, was pretty much a buy opportunity. And the most Bitcoin's ever gone below its 111-day moving average, I think, is about 52, 51, 52% in terms of below that area. And that's what we got in the summer of last year, where Ethereum hit its low here in mid-July. So yeah, it was pretty useful as well for lows as it has been for support. And then also in terms of the pi cycle top, it's also useful for tops. So yeah, and I like that it has some synergy with other metrics as well, because what I like to do is take fundamental analysis, technical analysis, and on-chain data analysis and have, you know, kind of like a Venn diagram convergence between the three. And, you know, where they all agree tends to be, you know, really, really important markers. And that's where I would say your Goldilocks zone of analysis is probably going to land for most people. So I do recommend that people, you know, study all three areas, because a lot of people tend to get really heavy in either technicals, fundamentals, or on chain, and then they get blind spots, you know, in terms of other metrics.
So somebody in chat asked, you know, because one of the things we like to do on this channel is definitely bring alpha content, but basically bridge that gap from beginner to pro. And somebody asked, what does all this mean? In a very succinct way, what this means: 111-day moving average. If you're using no other indicator whatsoever, you're just seeing price below it, then you can start utilizing. You can utilize other skills like price action analysis, RSI, all these things. But if you're below it, you can start looking for opportunities to buy to retrace back up into it. When you're above it, you can look for opportunities to sell for it to pull back and find support on it. So if you're below it, you're generally in a downtrend. If you're above it, you tend to be in an uptrend. And how far you are separated gives you an indication of when you can start looking for sell or buy opportunities. That's what it means.
Exactly. And you can see here it was used as support for this 60-day cycle low back in around March 10th, 11th. And then here, when we came below the 111-day moving average, Bitcoin could only stay below it for about 10% for about maybe 2 weeks. And that was a good buy opportunity. I mean, if you're going to just use that one in particular, which I think is, you know, fair for where we're at in price right now. Right now, the 111-day moving average is at 28,535. So if we, you know, were to say, okay, let's say we go below that by 5 or 10% again, right? A 5% move below there would be about 27,150. So that's there's part of the reason why I think 27,000 is an area that I think we could go down to. And if we did, right, that area you'd want to see hold, because anywhere below there, I do think starts to tip in the favor of the bears. And so would you put a stop loss there? Not me personally. I would just pause the buying, wait for the drop to happen a little bit more, maybe towards 25 or so, and then buy at that period of time. So, but going back to 60-day cycles, in terms of what those tell us right now, is that we have a high here on the 60-day cycle on day 28, which is neither really bullish or bearish. It's technically bearish because it's before day 30, but it's pretty much close to day 30. So I would say it's neutral. And then if we go on an average of 60-day cycles, we could get a cycle low sometime around mid-August, August 14th. But what tends to happen if you have a neutral or bearish high, like we had here, let's say on day 35 here, we had a 52-day cycle low instead of a 60-day cycle low. So if you have kind of shorter highs, you tend to get shorter time periods for lows as well. So if that something similar were to happen for that, then it's pretty much the first 1 to 2 weeks of August that you're looking for a low in at that period of time. And so it's just a guideline and it's helpful. And then you can see how that lines up with support here. And so as time ticks away, right, if we start finding solid support in this area and we start moving back to the upside, the two areas I think Bitcoin has to clear to the upside in order to get bullish again is first about 29,800, which is the top of this support area here. If we regain 29,500, that's the first daily close area you'd want to see Bitcoin gain. But once it gains this area right here, which is about 30,400, if Bitcoin can gain 2 or 3 daily closes above that area, that's where I think we get bullish again. In terms of 60-day cycles, one thing that is interesting is if we go to this one here earlier this year, where you had a pretty bullish move up in here, and if we look at the cycle timing of this, right, we have a high here on day 34 of the 60-day cycle, looked like a cycle low here on day 45, then you came back up for an actual 47-day high, and then it whipsawed back down for that little bit longer low of about 69, 70 days. So I think, and one thing we had within here actually is you had bearish divergence here on the RSI versus price, right? Where RSI was going down, price was going up, and it came down, but it came down twice. So we could actually see something similar, but I think less extreme because we're closer to that 111-day moving average. So we have that bearish divergence right here in the chart, but we're close to that support area. And then we don't have too much more time in terms of going down. But what I think could happen is something like this, where you whipsaw down, back up. We've whipsawed down. Now we can come back up. And like I was saying before, we could come up to that 32, 33,000 area, get rejected around that area of resistance, which is this longer term green trend line, and then come back for an actual 60-day cycle low, which might just be back down to the same area we are now. So that would be pretty much the next 1 month or 3 weeks of price action. And yeah, so I think that's where people get really confused, is when price just whipsaws up, comes back down to the same place you're at. You're like, well, what did I do? I didn't do anything. I didn't accomplish anything. But that's because they're focused on the few weeks. They're not focused on the next couple of years, right? In terms of the next couple of years, right? I have a phrase: when in doubt, zoom out. And when you zoom out on this, right, and we were to just take off all the drawings, we're still very, very cheap here on Bitcoin. This is kind of like that $8,000-$9,000 level back in 2018, 19, right? We came up here, and this area of price was our biggest area of resistance, which was 8,500 to about 10,500. Every time Bitcoin was back above 9,000, we're above 9,000, getting all the Vegeta memes and everything. And then it went back down again, and everybody's like, oh, and getting bored, right? Same thing here, right? We might come up all the way up here to this $28,000 to $30,000 level, because that's where we broke down from in the bear market. And that's where, some people decide the short term, people who've been holding kind of at a loss, right? They're just like, okay, I'll take profits and get out of the market. And so that's kind of what is holding things back potentially at the moment. Once you get rid of most of that sentiment, it takes, maybe 3, 4, 5 bumps of this price region before then you finally break it and we go to 40K plus.
Yeah, I can see that as well. Your analysis and my analysis are very, very similar. It's It's nice to feel reinforced on that. You know, you're not just looking at a chart blind, but it's always good to see different analysis too, because sometimes that opens the eyes or it just allows you to look at the other things. So that's Bitcoin. So what are you feeling? Do you feel? I'm guessing for you, it's kind of a other than the pros, it's kind of a no trade day today while the market finds its equilibrium around the very likely push-ups and pullbacks that are trading the speculation around that 2 or 3 hour period.
Yeah, exactly. If we're gonna, I wouldn't even play any of that in the like the day period. I think that's just kind of most people are gonna lose doing that. So what I look for, like in Ethereum here, right? If we're looking at that, I think the next support area for Ethereum is about 1735. You can make it a little bit of a wider one if you want. And in terms of support, right? If we come back down to that area, that's a real good buy price for Ethereum. And if it comes back down to anywhere below 1700, I think it's cheap as hell, and it probably doesn't stay under there too long. So if Bitcoin were to pull back to 27, 28,000, I think Ethereum pulls back to maybe low to mid 1700s. And at the current moment, unless Bitcoin breaks below 27,000, that's what looks like the best price you're going to get.
Yeah, I agree with that. What's your thoughts on the XRP chart right now? And just kind of a playful aside, Digital Orgy here in chat has repeatedly said, he's kind of spamming the chat a little bit with this idea that Bitcoin is he keeps saying Bitcoin's dead, Bitcoin's going to zero, it's over for Bitcoin, XRP is going to take over. What's your thoughts on that possibility on a percentage basis? And then where do you actually see price going? What's the chart looking like on XRP? Is Bitcoin dead?
Hell no.
It's only just getting started.
Yeah. Well, I mean, I did do my show on, we do a show every week on Sunday night at 10 p.m. called Moon Gang. And we kind of tongue in cheek in the title put in XRP, the standard, because that's been kind of, a little bit of a running joke. But if you take a look at XRP to Bitcoin, right? I love XRP and I love the fact that it won its court case. But compared to Bitcoin, right, it's lost money over the long term. And I know, some people might say, okay, well, it's has this channel here that it's trying to break out of. I'd give the XRP guys this is definitely at some point in this bull market, right, and maybe sooner rather than later, XRP will outpace Bitcoin. But for right now, it's just not that time yet. I would say maybe 2024. XRP has that chance to really, really run. And here's the thing. A little bit of information on XRP is there's a bank in Japan called SBI, and that bank has the board of directors for Ripple, the organization in terms of globally, but they're pretty much in charge of Asia. And I've talked to one of the people who was on the executive board, and one of the things he said was Ripple is being intended to like they're having talks between Japanese banks, South Korean banks, and Southeast Asian banks, probably Singapore, by using XRP in terms of like an alternative to the SWIFT system there. So I do think actually XRP is going to get adopted, but the token itself will mostly get its tailwinds from probably what people think about it, not necessarily the tokenomics of it. And so that leads me to believe that most XRP runs are relatively short and they're profit-taking opportunities, and you take profits into Bitcoin or Ethereum. This is kind of the crux of my name, which is cultivate crypto, right? You're trying to cultivate more coins, but of what, right? What do you want, right? In my case, what I want ultimately is more Bitcoin and Ethereum. And so I would use XRP to cultivate more crypto, cultivate more Bitcoin, cultivate more Ethereum. In terms of its dollar chart, though.
So question on that.
Yep.
Are you a Bitcoin maxi?
Hell no.
Yeah.
Dude, I'm in Pulse Chain. People call me a degen, I don't know how many people in here have heard of Pulse Chain or really looked at Pulse Chain yet, but I mean, the amount of Richard Hart haters out there in the crypto ecosystem is astounding. And so, yeah, anybody who, is in Pulse Chain can't talk shit about Ripple, I would say, because we
Yeah.
probably get in the Pulse Chain and Hex community, we probably get just as much what do you call it, hate and negative discussion towards there as Ripple's gotten in its past as well.
Yeah, no, totally. Yeah, I sorry to interrupt you there. Keep on with the charts. This is good stuff.
Good.
Everybody, if you haven't yet, I just want to throw it back. If you haven't yet, make sure you're following. I'm unmuted this time. Make sure you're following Charlie over here at Cultivate Crypto. And again, you got all his links here. You can check out his YouTube, his crypto mindset course, and all his other stuff here. You can check out cultivatecrypto.com. And again, if you haven't yet, head over to BitLab Academy's Twitter page here at Academy BitLab. Hit that follow, hit that retweet, hit that like. You get entered to win. We draw every Friday. And of course, make sure you're following me here at Kellam. It's 2 L's on both times. No dot, no Kellham. It's Kellam. Look for the blue check and the hit logo. And if you haven't yet, make sure you're checking out BitLab Academy right here. You can share this with your friends and family. We have all this free stuff right here, the blockchain 101, Bitcoin 101, crypto beginners. And then if you want to take it deeper, you can go through all of this stuff here. Sign up right up here on the top right of bitlabacademy.com. Enroll now. You can sign up for BitLab Pro, which is the premium Discord, all access to courses, as well as all the indicators. You can also sign up for the all access, which is all the courses and the premium Discord. You can use Give Me 30 for 30% off. You can also sign up for free for the free content here for those of you if you want a better understanding of what blockchain and Bitcoin are, and then the general sort of basics of crypto and charting and TA. But now, back to you, my good friend.
Thank you. And I'm sure your audience already knows this, which is why they're subscribed to your channel. But the reason, that we're talking here today is because, Kelly's put in some fucking work in this bear market. And I think that's rare among crypto, I don't know what you want to call us, YouTubers, Twitter people, X people, whatever the fuck it is now. But there's a lot of people out here who give good information in the market and then just disappear like a fart in the wind during bear markets or during the brackish water between a bull and a bear market. So I highly respect that you're jumping on this now, where like literally right now, who's doing good content in the market? It's boring as fuck. And a lot of people, are kind of MIA in the market right now, which I think is just sad because, we're not getting the most views. We're not getting the most clicks, but who cares, right? People need to be educated. And I actually think if we talk a little bit about central bank digital currencies today, we can go into that a little bit later if you want. But in terms of central bank digital currencies, there is some, I would say, warning signs right now that you probably want to get a good chunk of crypto earlier rather than later, because it is possible that it gets harder and harder over the next 1 year actually to get into crypto. But we can kind of talk about that a little bit later. Let's finish the XRP thing here. And the other thing I would say is, one thing you're asking me before about being a Bitcoin maxi, you're kind of asking me like, what tribe are you in crypto, right?
Right.
I'm a profit maxi, right? Like the way that I look at this is we should be coin agnostic in the sense that we're not here to, worship crypto or worship a coin or anything like that. I don't really care about that. What I care about is making money, and the money in the market for me, the real money, is Bitcoin and Ethereum. And so I'm a profit maxi for those coins. I try to cultivate as much of those as possible.
My question to people though, that they want to do the tribalism, they want to say, is this better or that better? Well, it depends on what time in the cycle it is, depends on when and where. And if you really believe in your asset, you really believe in it, and you're taking profits at the top, are you taking your profits into Bitcoin? Sorry, are you taking your profits? The people that say they don't like Bitcoin will take profits out of these assets they say are better into Bitcoin or US dollar, but they'll never take profits out of Bitcoin at the top of a market into an altcoin that's peaking also, because that's going to drop further. So it's a silly thing. This is all about making money, betting our lives, having more capital resources so we can live a more free life and also be able to help those around us, friends, family, strangers. To me, it doesn't matter what the name of the project is. Is it helping in some way? Is it serving a purpose? Even with this idea of CBDCs, I don't really like the idea of them, but I hold a lot of quant, and quant is one of those, it's kind of one foot on both sides of the industry because it's decentralized, but it's also working towards providing software protocols to help governments also, it's only one of the aspects, but help governments also get involved in blockchain. Is that against the crypto mentality? Well, at the end of the day, I'm in this to make money. So in a way, it's kind of hedging my bets to say, if this is tied to any sort of governments and the governments are coming down on crypto, this is going to be the least likely to have the dramatic downside because of that. So why not participate in it?
Yeah, I agree. And people will say the same thing about Ripple. I mean, back in 2018, I met few people from Ripple in terms of the foundation. I don't think they're with the foundation anymore. But one of the questions I asked them was, why did you have Ben Bernanke speak at one of your conferences? Isn't that pretty much like totally anti-ethical towards crypto? Yeah. And they didn't really have a good response to that. It was a former CTO at the time of Ripple, but yeah, like we're here to make money, and I do believe there is a lot of good fundamental changes that can come from this technology. So I'm in it for the tech in some ways as well. But yeah, when we're looking at charts, when we're looking at the market, sometimes you have to take emotions out of it, and it's really hard for people to do that. So it is what it is. But
so
yeah, in terms of Ripple here,
let's wrap up. Yeah, let's wrap up Ripple, and then we'll wrap up the last 7 or so minutes talking about CBDCs, especially now that Fed now is starting to roll out. XRP is now a security. CBDCs, it is something that is coming, whether we like it or not. I'd love to get your thoughts on that. So let's finish up Ripple, and we'll dive in there.
Okay, perfect. So yeah, the last part about Ripple here is it has broken its bear market trend. If you look at it in terms of dollars, right, it does have higher lows here, and so it is respecting its uptrend. I don't think it breaks back below this area of 60 cents unless it gets unless Bitcoin goes below 27K. And so the area of support here, is probably somewhere between this 200-week and 111-week moving average for Ripple. Which is currently about 52 to 62 cents. So that'd be a good area if it does pull back towards this trend line. That would be a good area to buy. And yeah, so not too bad there. I guess one thing I want to look at here is if it does have any signals. Yeah, a lot of change. So yeah, this area, until proven otherwise, unless it goes above 75 cents on a weekly close, right, that area is now resistance. So then your area of probably paying attention to this is about 53 cents to 75 cents, and that area is probably a good accumulation area should Bitcoin hold 27K. The last chart I want to show here, because we did mention Pulse Chain, right, is the Pulse. This is wrapped Pulse Chain to die on Dex Screener. So it's one of the better charts of Pulse Chain $2. And I'll take off this fib retracement for right now. Super simple chart. I mean, Pulse Chain didn't come out here until about May of this year. It's been about 2 years in the making. It had a pump up here, and then it's just been kind of an accumulation. And where everybody who was getting in on the coin early basically did the ICO or sacrifice for in terms of price is right around this 3 zeros and a 1 mark. So right now, actually, Pulse Chain is slightly cheaper or right about its fair value for the amount of holders. Their kind of psychological price is based on that ICO or sacrifice phase. And so right now it's at fair value. Anybody who got into the project early or in the last 2 years, you can get into it at the same price right now. And so I kind of look at Pulse Chain based on the success that Hex had in the last bull market. Hex did do, the 10,000x that Richard Hart said it would do, which I thought was fucking insane at the time, and I didn't believe it. I actually came out at the beginning saying Hex was a scam, and it wasn't going to do that. And then I thought, well, what if I'm wrong? Because I did do some good research into it, and I said, okay, let me buy a chunk of Hex to see if I'm wrong. And I got proven wrong by Richard Hart and the Hex chart, right? And so I basically parlayed my Hex profits from the last bull market into Pulse Chain, and so it's kind of free money at the moment, minus the initial. I've already taken out like my very initial amount that I put into Hex at the beginning. So this gave me, Hex in particular, gave me the biggest returns in the last bull market. And so if Richard Hart does what he says he's going to do in this bull market with Pulse Chain, which I highly believe, because he was on streams with Alex Mashinsky and others during the last bull market, and they were all fucking liars, right? Alex Mashinsky being the biggest one of them. whereas Richard Hart was actually bringing a lot of profit to his community, despite everybody in crypto hating his guts and pretty much putting a bunch of smear campaigns on him out there. So that's all I want to say about that. But I do think this opportunity here with Pulse Chain is one of the biggest in this bull market, and it's one that a lot of people are poo-pooing, and a lot of people
I have a question about that, because I may or may not have had my sort of disposition on it framed through some of the hit pieces, and also just not diving in beyond some of the FUD campaign that I don't know the answer here. But when Pulse Chain came out, I know every project when they come out tends to have one issue or another. Didn't they have a lot of problems with people being able to get the coins, whether it was airdropped or the transfer between different chains? There was all this sort of confusion around that. Was all that solved, or was that all that just blown way out of proportion?
Yeah, it's a little bit blown out of proportion just because it's easy to jump on something that's not working 100% perfectly from the get-go. I mean, this happens with pretty much all chains. I mean, you see Phantom recently have a way worse issue with multi-chain and everything, right? So every chain has their issues. I mean, Ethereum at the very beginning, right, had to do the rollback, which is totally against decentralization, but it happened and people just forgot about it. So I think any hiccups that Pulse Chain had back in May were pretty minor, because I got all the coins that I sacrificed for very easily. They showed up in the wallet, no problem. There was a little bit of an issue with the bridge, but that's just because the bridge wasn't intended to be live exactly on day one. It took about a week, and then it's good to go. And if you really want to bridge over to Pulse Chain without having to worry about changing to the proper network and everything, this website here is pretty good, which is gopulse.com. You can see what the sacrifice prices were. You can see right now it's at its fair value, essentially. And then you can see the other coins here. If you press buy Pulse here, you can buy it with Ethereum, you can buy it with Bitcoin, you can buy it with stables, and it takes about a half hour to pop into your wallet there. And then if you just go over to pulsex.com, which is the swapping site for the Pulse chain, which is pretty much just a copy of Uniswap with burn functions added to it. Then you go over here and you can add the network to your wallet really easily just by interacting with the PulseX exchange. So those two websites are pretty much the easiest way to get in and not have to worry so much about, if you're bridging properly or any of that.
Awesome. Well, I appreciate you sharing all that. We got a couple minutes left. We're going to have to keep this brief, but we'll definitely be having you back on. What's your sort of, let's kind of wrap it up with your thoughts. Just, we can't go too in depth here. We'll have to have a longer discussion on this. Your thoughts on CBDCs, what the pros and cons, just whatever your thoughts on it. I can frame it and it'll go into 22 minutes if I frame it. So just your thoughts on it. Yeah.
Yeah, we could do a whole episode on it. My simplest thoughts on central bank digital currencies is that it seems like a 60% chance at the moment that we get central bank digital currencies within the next 2 to 3 months. Before the mid-October, I think central bank digital currency in the United States and the EU has a very good chance of being implemented and fully functional with any banks that are interacting with Fed now. So, and then I don't know how much I should say about this, but within 6 months, it's possible that Visa and MasterCard have cards that are able to interact similar to your iPhone in ways that give you and only you access to your central bank digital currency. That same technology, which I won't say specifically what it is, will also then be able to be repurposed for crypto, public and private keys. I don't know if it will be, but all of this shit is coming way faster than I think a lot of people expected. Even me, I expected most of this to be implemented slowly over the next 5 to 7 years, but I think it's actually going to be pretty much over the next 1 to 2 years. So this central bank digital currency stuff, as it pertains not only to the United States, but also most first world countries, is probably going to happen way sooner than we think it will. And the only danger to that is there have been some people saying that the banking system, kind of like, in India, they changed a couple of years ago, they changed their currency to where what was equivalent to their $100 bill went out of circulation, and they shut down all the banks and they said you have to go to the bank and get your money, right? Within a week. Otherwise, those $100 bills that you have at your house are basically worthless. And so it's very possible at some point that the United States banking system could shut down on a Friday, reopen on a Monday or a Tuesday, right? And now all of your money that you have in your bank account was basically transferred from, you know, digital zeros and ones in the database of the bank to now central bank digital currency. The reason why it would happen over a weekend is so people don't you know, get up in arms about it too much. And maybe that's Labor Day weekend, I don't know, but that's the next week in terms of a holiday that would line up with when it could be implemented. So that would be a slight danger. And then also, you know, are regulations going to be friendly to crypto during that period of time, or are they going to use this as an excuse to kind of slowly rug the ability to get into crypto? So I would say in the next 3 to 6 months, you know, getting as much Bitcoin and Ethereum as possible, just because it's a good time to get it in the cycle is great. But then also, you don't want to be fearful so much about the central bank digital currency, because I think there's ways to get around it. But I don't want them to rug my ability to basically get into crypto easier. And I think in places like the United States, that's going to be a little bit potentially harder or a slippery slope. So my point of view right now is just let's get as much of the good money as possible, which is Bitcoin and Ethereum, and get rid of that dirty fiat as you can, but keep enough fiat for the next, you know, for 6 months of runway, so that, you know, you're not going too hard in the paint, so you don't have to liquidate your crypto again to get, you know, to pay for something, right?
Well, you know, I mean, I completely agree with all the points there. And again, Charlie, I appreciate you coming on. It's been a pleasure having you. I look forward. Yeah, for everybody knows, he and I, we had about a 45-minute, hour-long conversation just talking about how we can be of service to each other and make sure that we can share ideas and make sure we can bring the best content to you for both of our own communities, and also help reinforce and, you know, open some thoughts and discourse here live on air as well. So that's what we're doing. So with that being said, everybody hit that like button, hit that subscribe button, join us here, ding the bell, make sure you're heading over to @CultivateCrypto. And Charlie, before you go, I'm going to hold your feet to the fire here. Of course, the price predictions are always based on a little bit of, you know, a confluence of different signals and what we're looking at. But we got the FOMC meeting coming up today. Do you think the daily close today on Bitcoin and Ethereum are going to be above or below current price action?
I like that question. Not such a day trader, but daily close is in what, like 8 hours or something like that. So
we should have found an equilibrium and picked a direction by then, I would expect.
Yeah, well, I think if it's going to go down in the next few days, it'll hit that 111 and then bounce from there. It hasn't hit that yet. But if I were to have to choose right now, right, I would say we're going to close a little bit higher than where we're at right now. So, you know, it's 29,300. Maybe we close at 29,500, but it's not going to be too exciting.
Yeah, right on. Well, everybody, again, make sure you're following Cultivate Crypto. It's, again, that's @Cultivate Crypto. And Charlie, I hope you have a wonderful day. Everybody else, I hope you all have a wonderful day. Again, hit that like button, hit that subscribe button on the way out. And anybody watching anywhere else, make sure you're coming over to youtube.com/@BitLab Academy, which is right here. I didn't have it pulled up, but there it is. Make sure you're following us here. If you're watching on Hit Network or any other spots that clip our show, make sure you come and check us out and scroll down here to the Daily Alpha. This is you know, really good stuff that's meant to be evergreen. So whether you want to know how the ETFs may affect crypto, Bitcoin, and banks, pro trading view guide, reversals and targets, how to find reversals and how to set targets, go ahead and go through this and comment down below what you think the price is going to do today at daily close, if you're watching this at any point later. And with that, I hope everybody has a wonderful day. Again, Charlie, thank you so much for being on air with us today, and I look forward to doing more with you in the future. And everybody, stay positive, be grateful. This is all we got today for the BitLab Academy. Adios, everybody. Adios, muchachos. Hit that like button, suckers.